the fears of tariffs have pushed at least the futures market down pretty heavy today. Unfortunately, I missed that trade. I had taken a quick short. It bounced off of VWAP, and I was like, okay, I'm out for the day. Made a little money. I wish I had stayed in that trade. It was worth almost 1,800 ticks. So that would have been a good one to be short on. But the rest of the market seems pretty concerned. Even yields started to spike on these tariff concerns. So let's unpack the tariff story, because it seems like it's affecting multiple markets here.
Yeah, so that's the thing. So what I didn't expect was that the rhetoric of the Trump campaign would turn into immediate actions like right away. Um, I guess we're all just used to politicians just being braggadocious and then they're not doing. And oh, in 100 days, in 6 months, or maybe they go around to one, two things. There's so many things that Trump is signing executive orders on and putting into place that the markets has this uncertainty of what this means for the future. One of the things that I thought was very interesting is this revival of the story that the paper gold market is actually that there's not enough gold to cover the paper gold market. Um, and I've heard about this. I don't know if you heard about this, but I've heard about this for years and years and years. Before the Bitcoiners were saying, "Not your keys, not your coin." They were saying if you don't own your own gold, if you don't actually have it in the, if you can't touch your own gold, you don't actually own it.
Right.
Um, well, the London Exchange has been the Bank of England has been the center point for gold for forever now,
Mhm.
but we're seeing this influx of gold moving from London to New
The
York
United States. Yep.
because there's this idea that Trump might place tariffs on all raw materials, and that might include gold.
Right.
And so there this exodus of gold towards for it to be in the United States.
Well, I think
But
it's
that is
important to pick up that cash and carry arbitrage play first. It's not because of the tariffs, it's because there was a spot difference between the New York futures market and the London spot market. So buyers in London were buying physical gold and having it delivered to New York in order to take advantage of this difference, settling their futures contract either in gold itself or in cash in order to profit the difference between the two. So there was already a big influx of gold from London to the United States. But the fear of tariffs is like eliminating that potential arbitrage play.
I see. Well, I thought it might be interesting. Well, let's just take a look at this article here, just to sum up a little bit. Traders and financial institutions are rushing to pull billions of dollars worth of gold out of the Bank of England and ship it to New York,
Yep.
fearing potential tariffs under the Trump administration. The sudden exodus has created a gold shortage in London, with delivery times from the BOE ballooning from a few days to 4 to 8 weeks, according to industry insiders. The Financial Times first reported the story, revealing that traders have stockpiled $82 billion worth of gold reserves in New York since November US election. This
Hmm.
massive movement of gold has left the BOE struggling to meet demand, raising questions about the central bank's ability to fulfill its obligations and sparking fears of potential default. Um, the what I find here is this the second heading, Bank of England gold dilemma as the default looming. The Bank of England, which holds 5,365 metric tons of gold on behalf of third parties, including financial institutions and other central banks, is now facing unprecedented demand for physical delivery. So people are actually now requesting the actual delivery of the gold.
Yes.
According to the BOE's December 1st, 2024 report, the bank holds the equivalent of 172.5 million ounces of gold. However, industry experts suggest that the BOE might have leased out far more gold than it actually holds, a practice that has long underpinned the paper gold market. People can't get their hands on gold because so much has been shipped to New York and the rest is stuck in the queue. Liquidity in the London market has been diminished. The BOE's refusal to comment on the situation has only deepened concerns. Market players are asking a simple question: if the BOE claims to hold 5,365 metric tons of gold and only 393 tons have been shipped to New York, why is there a 4 to 8 week delay in fulfilling delivery requests? So this is what I find to be particularly interesting because there's always been this idea of this sort of like musical chairs thing that, well, as long as everyone doesn't rush to the bank to collect all their funds, we'll be fine, right? That's the wonderful life story. Uh,
Hmm.
so just don't rush to do it. But if you're in a situation where you need to rush, will the paper gold market actually collapse? And I think it would be quite fitting that Trump's tariffs and Trump's plans could potentially collapse a market that's been around for what is it, 80 years now. Um, so the actually, I wanted to pull up something here, if you don't mind. Second, this was from Powell. I don't know if you watched the last press briefing for the Fed.
Bits of it.
I've never heard so much. So I've never heard him say, "I don't know," this many times inside of a press conference. Powell generally doesn't like to say, "I don't know." In fact, all the Fed chairs don't like to say, "I don't know." Um, but he does. And so I just wanted to play this clip here. They were basically asking what are the impacts of the tariffs on businesses, on individuals. Like, how are you factoring this into your decision making, whether you should raise a pause or cut rates?
So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess 18. Yeah, we didn't really know, and again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that.
All right. I just want to play that because I have never ever heard that from him before. Him just standing there shaking his head, going, "We have no idea what this is going to do to
Well, we
anything."
don't exactly have a lot of examples of this in the past where presidents have been in a position to be able to impose tariffs across the board in multiple countries at multiple levels. And worse than that, it seems unclear as to not only when they will be implemented, but at what percentage and the impact that it will actually have on our economy.
That's right. So that translates into volatility, right?
Right.
Whenever there's going to be volatility, and we're going to have fat tails, left and right tail opportunities. That means for someone like me, a degen like me, betting on tail events
Sure.
like the collapse of the paper gold market, um, or the opposite, where gold could actually soar drastically in price as the uncertainty festers. These to me are very attractive trades.
Well,
Um,
so yeah, on the gold story now, the play in my mind is to watch gold from here as many of these traders have been shorting the gold futures market and will likely need to buy to cover as pressure starts to build to cover those positions because the cost of importing gold no longer looks like a good cash and carry arbitrage play anymore. If indeed there is a tariff that impacts the gold market, then this trade doesn't really exist. So that could cause the price of gold to continue in the futures market to the upside.
That's right. And then on top of that is all the uncertainty, the financial uncertainty that
Sure,
the
because
policies
it's yeah.
cause.
Couple that with it being a safe haven environment or a safe haven asset, and many people taking flight to that. Yeah, you've got sort of a double whammy here.
That's right. So long goal here. Trump could be the guy who he could collapse the paper gold market, and he could also send gold to 5,000. You just don't know, and I
Sure.
just find that to be what's interesting about the gold market. I know we've said this on the show multiple times. Is that gold is an expression of, or often is an expression of a lack of faith within the current financial system. And so one of the major buyers of gold are central banks of other countries. And so when you take a look at those flows, how much they're actually buying, then you know that, hey, people who have a vested interest, like a significant vested interest in the financial system, they're taking bets that, hey, things might go south. So I thought that was pretty interesting. So the trade I would take for this in the short term um, would be long gold, and if the paper market does does collapse and fall, then that's a nice buy the dip opportunity because it'll certainly be revived afterwards.
Yeah, and it's been an interesting one to follow. I mean, as I look at the chart on gold overall, it's been on this incredible trend since October of 22, and it seems to be continuing that trend. So it still looks very bullish.
Yeah, absolutely. And I'm not seeing how that's gonna change.